Traders Roundtable. So I'm Syra, and I'm joined with Nitehawks and Ape. We thought this was a good idea, given what's been happening on with the markets, both traditional finance and the crypto markets. A lot has definitely gone on, and we haven't had sort of like a members of Deus Ex DAO come in together and start talking, to talk about what's been going on. And we thought that this was a good time to do that, especially with the three sort of traders in the group.
I think that's absolutely a good idea. And it's always good to have a few traders sharing their thoughts. Of course, we do that in the Deus Ex DAO Discord, but doing that public might help also some other people. Of course, this isn't investment advice, but hopefully you can learn a little bit more about how to chart Bitcoin and markets longer term. And we'll try to provide some insights. And I think that if you have some questions, just drop them in the chats. We happily discuss your questions and maybe open some charts for you. And I think Nitehawks has a really good long-term chart on Bitcoin, which he can introduce to us. So
sorry, but before that, I just wanted to say that this is none of this is financial advice, right? This is purely educational. We're sharing ideas. We're not telling you what to buy, when to buy, where to buy. This is purely an educational live event.
Yeah, be responsible for your own gambling, of course. So let's kick it off with the chart from Nitehawks. What do you see if you look at Bitcoin on a longer time frame?
Yeah. Hey guys, Nitehawks. This is the Brave New Coin liquid index chart for Bitcoin, which has the most historical data points in it, and is really good for charting out, where Bitcoin's come from the beginning and sort of where we are. And there's a lot of different ways to draw out these, this 4-year cycle. I just map it from halving to halving. And in between each halving, I see there being sort of 3 phases within each cycle. And so after each halving, you have this sort of parabolic advance, okay, which tops out and then has led to a 1-year drawdown through the second phase, and then into the third phase, which is sort of the start of the next uptrend and can be seen as more of an accumulation range. And so there's some very unique and striking similarities between the last 2 cycles, and one of which being, and most of them revolve around the drawdown period, the second phase. The main thing being that we have almost identical drawdowns on a percentage basis of around 85%. And they both lasted almost exactly a year, thereabouts. When you look at where we are now, we're decidedly into the second phase. I don't think there's any question about that. But what's different is the first phase after the halving. We didn't get the same sort of parabolic advance that we saw in the last 2 cycles. And I think that's thrown a lot of people off. I think a lot of people were expecting 6 figures. They didn't get it. In fact, we got a double top for the first time. And now we've descended into this extended drawdown period. The other thing to note is that the 200-week moving average, which is this yellow line on the chart here, has marked the bottom of the downtrend and has been historically the best place to buy Bitcoin throughout Bitcoin's history. But you'll notice here that while in the last 2 cycles, it's marked the bottom of the drawdown period almost to the tick, this cycle, the 200-week moving average is it's almost at the halfway point of the drawdown period. And this all assumes that we're going to actually see an 85% drawdown as we have in previous cycles. And also want to remind everybody, we're dealing with a sample size of exactly 2. So this is less than ideal as a way to predict things, but it's something to be aware of. So there's a number of things to think about. Are we going to bottom out around the 200-week moving average, or will this be the first time in history that Bitcoin is to lose the 200-week moving average on a closing basis, outside of maybe 1 week, which we saw here in 2015? Given the fact that Bitcoin's is facing macro headwinds that it's never faced before. Equities have been in an extended bull market throughout Bitcoin's history. So we are in uncharted territory. So I think that everyone should be aware of the possibility of price going well lower than the 200-week, which is around, 22K, we'll say. So let's talk about where we could go if we're going to go below that. And let me pull up a different chart here. Here it is. So yeah, this is just the monthly on Coinbase. And yeah, we have the range low, which is the 2021 open. And this is obviously a key level. We're holding it on the monthly. Currently, we have 8 days until the monthly close. I think we definitely want to see that hold if we expect there to be some sort of midterm rally. But in terms of drawdown from here, whether or not we see a rally off this level, I think it's hard to say that this is going to be a macro bottom for Bitcoin. And I think that people can't expect this to come down to the previous all-time highs, which are around 20K. And if we're going to have a deeper drawdown, and I think that is something that everyone should consider being a very real possibility, you have to look at the highest monthly close from 2017, just under 14K. I mean, on the monthly, that's the first line of support that I see. And below that area is this very clear SR level, which, I think I'd be willing to put limit orders here. Which is,
and I think that would be a really unique scenario, because it's, in these previous 2 cycles, the all-time high from the previous cycle was never retested after another new bull move. So if that happens, that would be the first time that a previous all-time high from a previous cycle would be tested, which would make this definitely a different cycle.
Absolutely. And there's sort of this, it's odd because we had diminished returns this cycle with the double top. There wasn't this parabolic advance, which topped out. And, there's a lot of reasons for that we can talk about. But the question then becomes is because we had this sort of less parabolic, more orderly move up and top and put in a double top over the course of a calendar year, does that mean that we're going to see a less violent or diminished drawdown as a result? I don't know. I mean, it's up for debate. It could mean that the drawdown is going to penetrate levels that previous cycles have not, So it's interesting. But yeah. Ape, do you want to move into some of your high time frame stuff here, or?
Yeah, let me open the chart. So I'll skip the long-term weekly chart, but if you have questions about like where does Bitcoin bottom, you already mentioned previous historical level could be either previous all-time highs around 20K. We've seen the 200s moving average on a weekly chart, which could indeed be another line of support. Personally, I also like to use some of these on-chain models. They use some pricing data, they look at wallet data, and in the past these have been quite well modeled actually in a way that you can use them to see where there is some capitulation or some extremes in the bull markets. And I never really trust one of these models. I think also these models have less and less extremes over time, and you can see that in the chart where these stops become lower and lower. While weirdly enough, the people who made these charts and put them online actually made a horizontal band. It's a little bit confusing actually if you correctly look at this data. But in general, I feel we haven't really had that capitulation event. We could indeed go lower, and since we already tapped into 25K and these indicators didn't fully reset or go into extreme zones, I think it's might be this time that we indeed get a lower test, and somewhere between 20K 25K is actually my level of interest. And of course you never know if 25K would be the absolute bottom, but as long as Bitcoin and crypto is trading as a risk asset, and we see that the Fed is tightening, and there is a higher probability of a recession, of course these assets get drawn down with them. So that's why I think we would still see some of these models getting into these extremes. And for example, this is the Pure multiple, where the model looks to for coin issuance, and it's still over here at 0.55, and I think the lower band somewhere starts at 0.5, so it didn't really tap. For example, if we look at the unrealized profit and loss, it's still into some kind of a neutral zone, or actually left that. It went into a hope and fear zone. But as we have seen in the past, often in extremer moves, in longer term bear markets, the capitulation zone gets hit, or at least it gets a little bit closer to that. So we want to see a move towards that, and I think that would provide a better long-term opportunity. And maybe we want to switch to the more traditional markets and see what would happen there, because Bitcoin is correlated. I think Syra, you have some good charts on the S&P 500. Could you share your thoughts with us?
Yeah, sure. 1 second. So I'm sorry. Before I sort of get into the S&P 500, I just wanted to go through what I thought, or sort of where we are on Bitcoin. And I, as you guys know, like I'm a level to level trader. I learned how to trade really from the Chart Champions group, and where we basically are is currently still technically inside this high time frame channel, right? So we had this one that some of you guys might be familiar with, and then there's this one here. And currently we're still inside this channel. So in my mind, until we get a proper breakdown below it, meaning a weekly close, several daily closes, then we'll start making our way down to the levels that Nitehawks and Ape were talking about, right? 23, 20, 20K, where we got this nice little bounce from over here. If you pull a Fibonacci pull from the COVID low up to the all-time high, you can see that we basically got the bounce. Yeah, we got the bounce right on the 0.66. The 0.618 was in line with this channel. We had some nice, I think, daily closes, right? Look at that. It's just perfectly on it. So as of the past couple of days, we've been in this little range here. I can't tell you where we're going to break, but once we do break from this little range, you can imagine where we go next, right? So just shown in another way. If you pull a, let's see, if you pull a fixed range pull in where we are right now, sorry. And then you get our daily levels. So this is that same range shown in another way. And you would imagine that if we broke to the upside, you'd sort of make your way up to that, maybe that $35,000 monthly level. I know that over here, we also have, yeah. So if we did break from this range, we'd then make our way back inside this other high time frame. Sorry, this other. If we broke the monthly level, then you would have, potential resistance or support flip to resistance from this other larger channel over there. That's sort of where I would look for the upside, and then maybe more so down. And if we broke down, you would hit that 23,000, and then, your other levels below that, and so on, all the way down to, that $11,000 area that Nitehawks was talking about. And just wanted to sort of show you guys another cool thing, why that $11,000 level is particularly interesting. So if you take a look at the Bitstamp chart and you go to, I pulled a fixed range from this range here. Sorry, go back to log scale. And the value area high is that 11,500, right? So if this does break, actually this is a Fibonacci pull from the all-time low, like 2010 all-time low to the all-time high you get here. So I would imagine that if this does break, then we will make you will make your way down potentially to that, this all-time high in 2018, 2017. If we don't get a bounce there, then you would imagine we would make our way down to this $11,000 range. And then that's generally how I'm approaching Bitcoin, and why I would be leaning more bearish than bullish is because, like Ape said, we are following, or we are highly correlated to, traditional TradFi, legacy finance. The S&P 500 right now, well, we've been in this nasty or parabolic uptrend since COVID, and it looks like we've now since broken it. I had this, I'm just going to zoom in a little bit because I think you guys might find this interesting, for the traders who are here, but I was following this channel. Let's see. Really since a couple of weeks ago, and we were respecting this channel, hitting the golden pocket, retracing down to the, hold on. There we go. So we were basically following this channel, and where it would get a bounce from, right? In the beginning, we were respecting the 1618 extension, making our way back up to the 0.5 internal fib. You know, we get a touch from the 0.86. Anyway, it was just following this sort of thing very, very nicely, right? You could literally predict, right? So we hit the 1.41 extension. We make a bounce up to the 886, right? And then we go down back to the extension 1.41, and then back up to that 886. And I was able to just like, okay, well, we've done it twice. Maybe we're going to do it a third time. And then we did it the third time. Made that bounce back up to the 886, and then down. We broke the 141, hit the 1.618 extension. So that was something different. And so I thought, well, maybe we're going to see, you know, a deeper retracement now, which didn't happen because we got a bounce at the 1.13 extension, made our way up to the 0.5. I thought at first that this was the first 0.5 touch, but I was incorrect because, you know, I found that we touched it here, we touched it here, and then we touched it here. Now, I know that a lot of people probably don't know what the hell I'm talking about, but I am talking to Ape and Nitehawks here because these guys are traders and they do know what I'm talking about. So yeah. So this is where we are sort of like zoomed in the 30-minute. I have a slightly more zoomed out version of where we are. Another channel. Right, so this is sort of like the newer long-term high time frame downtrend that we could be in or that we are in until proven otherwise, meaning either we break further down, which I don't think is going to happen, not like that, or we break up, you know, and start trending back upwards. But for now, this is where we are, right? So this is, I would imagine this area to be our first major sort of level of resistance, the value area low of this entire uptrend. And until we sort of make our way back above 4,000, well, you'd expect us to maybe just, you know, range bound heading downwards in this way. So this is where I see us, at least in the medium term time frame, right? Zooming out to the higher time frame, I found some interesting things. But before that, I just wanted to point out that in my mind, if we do continue moving downwards, where could we potentially, you know, see ourselves bounce? I think because of the nature of this like COVID rally, anything that goes up like this can easily go down that way in the same manner. And so I would imagine like basically where I would think the low could potentially be if we are in a sort of bear market, we would make our way back inside this area here. That's what I would think if this is like an extended sort of an extended bear market, right? Which technically the one-to-one of this move up would put the sort of the one-to-one in October 2023, meaning this move up, how many days this took, the one-to-one would be like that same number of days down. And so you would think that if we are in an extended bear market, we could potentially, you know, get to this area sometime around next year, October, potentially. So zooming out again into the SPX, because there's just more information here. I basically like went all the way back to I found these different ranges, right? So us, at least me, I barely knew what was going on in 2000. I wasn't even basically paying attention to the .com bubble, but you can see that we were in a range here that lasted, that's 4,000 days, right? That's 1997 to 2009, and we were in like this massive range. Oh God, yeah. So that's 12 years of range, followed by almost 12 years of up only, right? And so you would think, well, we just did this. Maybe it's possible that we just maintain range bound in a very large range, similar to what happened in 2000. That could be. And so I went back and I went to see where else were we range bound. And there were extremely long periods in the S&P 500's history where we were massively range bound, right? I'm sorry.
Stagflation.
Yeah, scary. Let's see. Let me just take this out 1 second. All right. So what was this? This is a 6,000 day period where, when I say range bound, like you're still seeing massive moves, right? This was like, from the bottom to the top of the channel is 50%, right? So you're seeing 50% swings, 25% swings, and more in a relatively short period of time, right? So, well, 2 years, I guess a lot can happen in a year, but this is what used to happen. This is what happened for like a good 20 years back in the day. And that's just what it did. And so my idea was, well, it's not, if it's happened then and it happened here, why can't it happen here? And if you were to sort of see that happen, how would it look like, right? So over here, we saw these bounces at the golden pocket, right, which happened to be at the bottom of this channel, and we saw maybe one at the 786, one deeper retrace before the major move up in 2000, 97 to 2000 to 2008. You get that golden pocket bounce again. So if something similar were to happen, you would expect some kind of reaction at maybe at this level. This was that thing that sort of volume area that I pointed out in ES, which is at the 0.5. And so if this does break, you would expect us to at least touch the golden pocket, and that would be a complete retracement. And how I would imagine it would look would maybe be something like this, right? And this was taken from that 1968 to 1980 range. So in my mind, maybe something like this. Obviously, it's not going to play out, maybe anywhere near, but this is what I would imagine, we would be doing before making our move back up. And this would take, what is this? December 2027. We could potentially be in this sort of like prolonged either sideways or bear market. And a bear market, we can break the high and still be in a bear market. Like that's what Bitcoin did, right? Bitcoin broke a high, it made this high and then broke the high and then down. But that's still technically part of your part of a major bear market or down move, as per like, I guess Elliott wave theory. Like this is not a new bull market. No, it's part of this larger down from May.
I think if I've seen a similar analysis to your S&P 500, where I might want to show that on my chart. It's in the past, when there was a recession, the S&P took out basically the low below a previous type recession. So over here you can see that this was the low, and it tapped below that and then began the monster rally. And there are more instances. There was a really good idea that that happened a lot more in the past. I think this was also another example from that, where there was a big correction here. It got below these lows, took that liquidity, and then started basically the monster rally over here. So if we take that into account and have that scenario ready, we apply that to this chart, and it might not be a recession, but a more volatile correction. Yeah, there is a case that indeed it could get below, for example, these lows, below 2,250, for example, which would also line up with a Fibonacci retracement. So you would expect to move down here, take out these lows, and then maybe get that rally, which would line up with a golden bucket if you just take a normal Fibonacci, you draw it from the 2008 recession lows, so in 2009 to this high. So it would make sense, because there is quite some confluence there.
Are we looking at like I don't know, 4-figure Bitcoin on that move? That's brutal. Yeah. I mean, because it's what do we? I think a drawdown from here on the S&P to that level is another 40, around a little more than 40%. We've dropped. I just did a little price range on mine. Like we dropped a little more than 20% so far. So we're doing the move off the highs 2 more times on the S&P. I don't know. One thing I think about is like just based off the history of the S&P, I don't know that the market is going to give that deep of a pullback on these equity indexes.
No, so I actually saw that. I believe the S&P 500 has only made a 50% retracement twice, right?
Right.
And I think that was 2008 and something way back when. So it doesn't happen often. A 60% retracement. So you said it's been 20% down. Another 40 would bring us through the COVID lows. I mean, that would be terrifying. It would be probably unlikely, just because we've never seen it before. But then again, what is it? Unprecedented times, right? Like
Absolutely.
we're in a time that no one has seen before. We've printed so much money, or the U.S. has printed so much money. There's just like, I guess, a lot going on. And we simply don't know. I mean, to me, the past 10 years of up only, maybe the last 4 years, that made no sense. I think, I don't know, or the last post-COVID, like that how'd you say, parabolic move just almost made no sense to a lot of people, I think, right?
Yeah.
Yeah, but I think all these levels are fine to mark in your chart, whether it's
Absolutely
only a 50% or the 61% retracement, because I think I wouldn't be directly buying those levels. I think it's good to understand that this drawdown in the market is a result of federal bank policies. Tightening.
Yeah, I mean, I have this. I have those levels marked. Like, I definitely good to know. I mean, the worst thing you can do, I think, as an investor, is to say it's never going to go there, because you just don't know. And if it does, then you're screwed.
Yeah.
right?
Yeah, but I think the case would be for a potential bottom is where the policies start to shift again, or are at another end of the extreme where maybe interest rates are actually super high and they need to, lower them or start stimulus again. So I think that's what you have to look for eventually, and see, okay, does this level make sense on the chart? And you can try to be early and catch that absolute bottom, or you could wait for some momentum shift a little bit later down road. See if it was a logical level for it to bounce from. See these shifts in policies, and then maybe start your longs again for longer term positioning.
Yeah. Yeah. Or going back to like Bitcoin, and sort of where we are currently, I think there is a case to be made of the dreaded return of the bouncing ball meme that we saw in 2017. I think that this sort of advance up and where it just looks like open air below is something that has a pretty large effect on investor psychology, and they don't want to see this level lost. And I think we're going to be dealing with that again at this 28,990 level, the 2021 Open. It makes sense for me to see this level get defended. Was the first time back since almost a calendar year, and I think there's a lot of people that are pretty heavily underwater on some spot positions that maybe haven't sold. And I agree with you, Aperture, that I don't think we've seen real capitulation yet. Even the sell-off out of this sort of bear flag that we formed here was orderly, in my opinion. I mean, it was pretty, it was violent, and it was on the backs of the Luna debacle, but it wasn't a massive move down. I mean, didn't happen in one day. It certainly wasn't as violent as the drop we saw in May of last year. Of course, that was a lot of liquidations that pushed us down so far at that time. But on a drop below this level, I think that's when you start to see some real capitulation. And for that reason, I think we see the level get defended. And classic chart patterns are made fun of quite often in crypto, but Bitcoin loves to paint the classical chart pattern and then have them play out. You can see it all over the place on the higher time frame charts. So, I mean, something like this is something that could very much make sense to me, And then,
that bear flag was super clean, actually.
No, it was so clean.
Yeah, it was really nice.
Yeah, and the other thing I'll say here is that if on this chart here, the yellow line is the 100-week moving average, and this is the 200. You could almost see the 200 moving up towards this level, and then that being the level that breaks, sort of like the 100 did in 2017 right here. So it comes up like this, or somewhere nearabouts, and then we break below it. And and then you could almost play it as you start buying spot down here, but what's confirmation for a reversal, macro reversal, and sort of a start of an uptrend? Is a reclaim above the 200-week. So.
Yeah. Which would be tough, right? Because if we do retrace down to like 15,000, right, 17,000, then you'd really be waiting another almost, what is that, like an 80% move from the bottom, which a lot of people would hate. And even more people would get wrecked trying to catch bottoms. But sometimes, it's worth the wait, because if we are confirmed in a new uptrend, then you are looking for another 100% move, right? We have, you would think that we would potentially break all-time high, if we enter another uptrend from there. I also like how you sort of painted that picture. That's also kind of similar to really what we did in 2018, right? It was just
Very
like
much so.
sideways, and then the floor, gave it,
Yep.
and that could definitely happen. So if you, sorry, Ape, if you can transfer over to my screen,
Yep.
if you take a volume range pool, right? So this will show you the areas where a lot of volume transpired, and you can see that between here and here, right? You have this node here, which is in line with the 0.66. If that breaks, then your next stop would be over here. 19,000. What else is in 19,000? Actually, I'm not sure. Let's see. I don't think it's a lot, right? I don't think there's a lot of levels in, there's a daily level here at 18,000, maybe some monthly naked point of control. So not much confluence, right? Not many reasons why, well, certainly between 19 and 23, like there is nothing, right? There's like no space there. So if we don't get a bounce, then it's definitely here next. And then if this doesn't hold, then it's 15, right? And simply because there was just no volume that transpired, in those areas, right? So 19, 15, and then 13, and then you get into this area, this sort of like nice 11,500 to 9,000 area that we were talking about earlier, which honestly sounds like a great place to really start. Depending if and how we get there, right? Then you would just want to be buying. You would want to just buy. Maybe, I mean, how would you guys play this? If you were a spot buyer and you were worried about, another 50% drawdown, would you put a stop loss? Let's say, would you put a stop? Would you accumulate and put a stop loss like if price broke down there, or how would you guys play this scenario? I'm curious.
I mean, honestly, I think it's just, I don't even know that I'd put a stop down there. I mean, it would all be dependent on the macro situation that we're dealing with at when price approaches that level. But in my opinion, if we start seeing weekly closes below the 200 week and we're down here in this zone below previous 2017 highs and just anywhere in this sort of wide $10,000 range, all the way from 20K down to 11. I mean, dollar cost averaging in that zone, in my opinion, and you just, you make your bet and have conviction in it and walk away, I think pays off.
Yeah.
You may deal with something more serious in terms of drawdown, but in my opinion, a stop loss on an accumulated spot position down there is high risk, really, because a wick could just put you out of your position.
Got it.
Yeah,
that's how I play it.
So I think you always work with the assumption that there will be another bull market, right?
Right. I mean, that's what I'm saying. We're in this for a reason, and that's because we, think that there's much more upside in crypto and Bitcoin and in the broader crypto market. So, at some point you got to draw your line in the sand and make your bet, and
sure.
whatever happens. That's the game of investment. So,
And so for me personally, right, I we all trade derivatives, we all go long and short. Like my biggest advantage of being, someone who can short is that, if we do get something like this, like a bounce, and then we move up, and then we bounce even further, well, you would think that at a sign of weakness, at a good sign of weakness over here, then you short as a hedge. Let's say I put in like 5, I don't know, let's say I buy 1 Bitcoin here, right? Then I can just short that 1 Bitcoin at a sign of weakness and then ride that down. Supposing I have more money to buy at deeper, lower levels, then I can just buy and accumulate. If we see that happening again, then, hopefully I would be able to catch this short and then just keep hedged. and you
Yeah,
can do
absolutely.
that.
It's an ideal way to handle it for sure.
Yeah, and you can literally do this for you can survive doing this for years, until we get that next pump. And you're earning funding and you're gaining Bitcoin as you're doing it. Like, I think these are just the advantages of, or it shows you the disadvantage of the hodler, right? Like, it's not going to work. Hodling is not going to work unless you bought really, really early and bought a project that's going to be around for another 10 years. Which I think is a good segue to us talking about ETH, right? And something that I think we're all very bullish on, at least for the long term.
Before we tap in, I think that I just want to comment on Bitcoin. Have that as a final thought, maybe, because I agree with both your views here, and I think I would also stop loss this McDonald's application, where you just buy, and if it's spot, you keep accumulating that, and the more extreme it gets, the more size you put on, but always slowly, because I think I always like to use, for example, 100 moving average on a daily chart. Somehow it always regresses back, so if it goes into an extreme, you can start to buy. And even in a bear market, for example, here we saw in 2018, it goes back towards that mean or slightly above, and you can always take profit on moves like this, which are fine moves. And when you really have that confirmation that momentum is flipping, as was somewhere over here, and price is holding above some moving averages, and you see that bullish momentum, that's where you can put on more size or buy back what you sold before. And people are always scared that they miss some extra 20% here, but if you can take profit and take that profit, you have eventually more dollar value to play with, and it gives some security. It gives you less stress to handle these markets. So for me, I would be looking for extremes too here. I think this might be a temporary extreme, could have some short-term bounces, but definitely will be looking for lower later. So downtrends don't go in one move, as we've seen in the previous charts too. You can play bounces in between, but eventually on a longer term chart, you will go into such an extreme or such a low level where you could say, okay, let's scale into some spot that I will hold for longer term, and maybe wait for that confirmation later on. Let's take a look at Ethereum. I think Syra has his chart ready. Had his chart ready.
Yes, sorry. Actually, in the simplest sort of analysis that I have is the ETH BTC pair, right? So the idea was, we've been in this triangle for a while, and we've poked our head above it twice, and we've touched the bottom now 4 times. It's probably going to break to the downside, right? And then I noticed that this channel, which was in line with this weekly level I have here, you would imagine if that holds, then you would get something like, maybe we range, maybe ETH BTC ranges for a while. I'm pretty sure everyone was expecting us to sort of break all-time high, but now it's been 5 years. It's been 5 years since we got anywhere near here, right? And I don't know. I mean, do you guys, maybe one day, how we get there, I don't know. And when we get there, I don't know either. But what do you guys think?
I think it's such a weird pattern here at the top, or when the rest of the market is actually going down. In some way, I would say don't overcomplicate this. If whether direction it breaks out, it will break out, and you follow that. I think it's somehow very unlikely that it's going sideways, because it doesn't look like that at the moment.
Yeah, yeah.
The pattern generally, if it breaks up, that's where the rally is. But that would be absolutely weird looking at the rest of the market now, where liquidity is leaving the market. Of course, Ethereum is a little bit less liquid, or has a lower market cap compared to Bitcoin. And that's where I would say it probably breaks down, which would be a little bit more odd for the pattern, but more in line with what the rest of the market is doing.
So something like this.
Probably something like that. Yeah, I think that would make more sense to me, because Ethereum outperforms Bitcoin, whether it's to the upside or to the downside. In bull markets, it outperforms, and you have higher returns. But in bear market, it definitely outperforms to the downside. So I think it's just a play that you need to see in the context of the markets.
So I think what I would get from what you're saying is like, be even more careful buying into ETH. I think that's what I hear.
Yeah. And for example, what I like to do is in more bullish trends is be more exposed to Ethereum than Bitcoin, because eventually it outperforms. It has more use case, or more activity actually on the network. It has more like all these side chains or chains that tap into the security Ethereum is giving, which Bitcoin doesn't have. Of course, people are trying to build some DeFi on Bitcoin, but that's a discussion for another day. On Ethereum, it is working and solid and has activity. So, yeah, that's important to note. But also in DeFi, we see that all these faults and all these yield farming mechanisms have less and less returns, because there is liquidity flowing out of the system.
Yeah, I think like trying to map out where you might enter into an accumulation range or a bottoming range for Ethereum is a much murkier undertaking. And so, I try to keep things pretty simple. And so when, Bitcoin dollar chart gets to an area that I find interesting for spot buying, then I'm going to be deploying capital into Ethereum as well, wherever Ethereum might be at that point in time. That's the simplest way for me to think about doing it, just because also the history of the Ethereum chart, like you're not getting like what happened in the 2018 bear with Ethereum was so driven by all of these ICO treasuries just continually dumping their Ethereum on the open market. I mean, while Bitcoin was holding 6K, Ethereum was in down only. And we're not, obviously that whole situation is gone. The network is much more mature. We have legitimate layer 2 ecosystems that are starting to be built out, and it's just we're in a different world than we were in 2018 bear with Ethereum. But where it might bottom out is a very tough question. So I just let Bitcoin tell me that.
Yeah. And as you're talking, I'm just like sort of I don't actually take a look at ETH. I don't trade it, and ever since I started selling, my spot, I really haven't really taken a look at it. But I mean, you would expect, and which we are, right? I actually had these boxes here half a year ago, and you would expect that bounce to happen somewhere here, and it did. And if we do lose that, then you would expect the next bounce to be somewhere here, which is, another 50% drop, right? And this is where it's also kind of weird, because I have different analysis done on different charts. So at least on this, I'm using external fibs to tell me or to show me where we could potentially get another kind of reaction, and that's the 1,200 area. And so if you wanted to sort of like ladder in your spots, then I think this is a good area. Not financial advice. And then this is a good area, to start accumulating. And this is that last all-time high, which is probably, if we do get here, then Bitcoin will be at that $11,000 accumulation range that we were talking about, I think, right? If it was any sort of similarity in movement, then that's what I would expect. I find it very, very hard to believe that Ethereum will drop much lower than here. I find that hard to, but it can. And so just be prepared.
Yeah. So do we want to talk about more midterm stuff and sort of where we are and where we think we're going, from where price sort of currently sits? Aperture, do you want to kind of talk about that a little bit? I thought you had a chart earlier that looked pretty good on the midterm stuff, maybe.
Yeah, I'll give an overview. Maybe as some final thoughts, what we see, in the next few days or weeks happening. I think that, of course, currently Bitcoin is ranging. We see here this range.
Sorry, Ape, I don't see your screen.
It should.
Nitehawk, do you see it?
No, I don't.
That's really odd. Okay, let me redo this.
There you go.
Okay, so this is basically the range I'm looking at, and currently Bitcoin is trading at the high of that, at the point of the value area high, but also near the point of control. It is, however, some kind of a tightening pattern. So if you draw something like this in here, you can see that the volatility is decreasing. So you could expect some more volatile moves coming after. And the question is, where will it end up? I think, of course, depending on macro conditions, it could easily nuke down. But after such extremes, such heavy selling, you could put on an RSI. You could see that was really oversold. There was even a nice divergence here, and after that, price bounced. You could expect that some people are really late with their shorts, and you could expect some short-term relief. Yeah, absolutely. And I think I've seen, when I look more at some CVDs across exchanges, I think some have put on some spot buying, and some more like TWAP like bots. And I feel something changed from here to here, and I think we could see that those spots would push out some futures in the near term. So I'm still waiting for a real trigger. I'm slightly positioned already for that, but I think the real trigger would be that Bitcoin would cross like the 100 moving average on a 4-hour time frame. I also like to use the trend spider chart for this, where I anchored some VWAPs to the last previous high and to this low, so you get some like ranges in between and a lot of lines. But Bitcoin is stuck between this, and these lines over here represent a move up or move down. but I think that will bring volatility. And my guess is that it's up, but I really want to see that move happen, where it goes above that VWAP and then starts to squeeze. So I think Syra at the start of the webinar said that 35K would be a viable option, and I think it can be a good option for a move. Of course, probably 33.5 is a target too, and there are some resistances in here that are actually important too. So I think you could take some profit, or I definitely will take some profit on these up moves and see if there are important rejections, maybe scale on some shorts. But I rather trade a trend than directly catch exhaustion or the exact bottom or top. What are you thinking about the more short term, like 4 hour, 1 hour charts?
Yeah. I'm sorry. 1 second. Nitehawks, do you mind? I actually unplugged myself. Nighthawk, do you mind giving your take first?
Yeah. Like I was saying earlier, we were talking about sort of more big picture stuff, like this 2021 Open around 28,990. I mean, the fact that we've come into it, had big wicks below, and are holding it after so many days. And we are certainly in a range, but I think my bias in this area is to the long side. I, like Aperture, have sort of waiting on a trigger, and that has me a bit nervous because I'm waiting on these. Let me go to the hourly. I was waiting on something to happen around these lows, and what makes me nervous about it is I think a lot of people are waiting for something to happen around these lows, and we've seen this before in this bear cycle where that happened to me here too. I was waiting on these lows to get taken for a move up. They didn't. We went up to whatever it was, 48K, and I could see those lows remaining right where they are without any sweep below them, and we see a move higher. So how do you trade that? It's a tough question, but I think that one thing to keep an eye on is this weekly level here, which was like previous demand. Let me put this area. Oh, hold on. And then coming back to the hourly. Oh, there it is. A reclaim up here, because I mean, this is resistance currently. And if we can see price get up here and you can get it on the low time frames and look for an entry on strength, that's one idea. I don't like the idea of shorting anywhere in this zone, just because of the significance of the level and the fact that it's pretty open air below. But it's unsurprising to me that we're forming a range here, given that a breakout on either side would lead to a decent move. And so I think there's some indecision out there. And yeah, we'll see what happens. If we get a move down to this yellow line, I'd certainly be looking to get in a long position. If it doesn't happen, I'm looking to see what happens up here on a closing basis and if there's a way to get involved there. So I've been sitting on my hands here for a bit. Last week was not much of a trade in either direction for me. So I'm trying to stay patient, and I think it's don't diddle in the middle is what I'm trying not to do. So, yeah.
Yep. So I would agree with you, especially on the you don't short down here. You just simply do not short down here. This is where you look for longs. And someone mentioned it earlier. I think Ape did, right? People are going to be the late shorters which is, probably a lot of people are going to be looking to short, that if we do get a sweep of those lows, you're going to have a lot of volume most likely coming in on the short side, and the how do you say, the options are they get trapped and then we go up or we break down. But
that's one of the reasons why I think that those levels. Sorry to interrupt, but I was just going to say that's why I think that level could still potentially get swept, is because it's just below, this macro range low, and you're going to get, I think, FOMO breakout short positioning coming in that could be caught offside. But we'll see.
Absolutely. I mean, I would bet on it. Honestly, I would say that it's probably going to happen. Whether or not we get like an SFP type move, I don't know. But I feel that we're going to get a sweep of those lows. But I don't know. If we do move up to the upside, where I think you can see some kind of reaction.
Do you want to put your screen up?
Am I not sharing? I'm sorry.
No, we're still on mine. There you go.
So I think the first area of resistance would be, back into this high time frame channel. Like I said, right, 35,000. It's in line with this monthly level. If we make our way up past that, then you have this golden pocket right where these two dailies are. And this is pulled from this high to this low. And look how nice, look how perfect that is. But by the way, I don't know if you guys know like how I get to these dailies, weekly, etc. levels. This was actually created by Daniel from Chart Champions, and basically like it's just these closings, right? So if we're in an uptrend and then you get a close here followed by a red down day, then that turns into a new daily level. And what they like to do is it's only valid until it's tapped once. And so if it's tapped, then they remove it, right? And then you look for your next daily level, right? So then this became another daily, and et cetera, et cetera. And so that's how I get these levels. And yeah, when you get the confluence like this, then you can bet your ass that you're probably going to get a reaction. And so a bullish case, really the bullish case would be something like this, right? You get a bounce, test resistance support inside the channel, get rejection, and then bounce again. And then this would be an amazing spot to buy, because then you just got this is your confirmation, right? That's your confirmation. I would definitely sort of get heavy over here and expect to move up to at least the middle of the channel if this sort of situation happens.
Yeah, that golden pocket area would line up nicely. There's some confluence there with a retest of the bear flag trend line.
Oh yeah, that's right. I actually I just deleted it before we got on, but yes, you're absolutely right. So you're talking about this guy.
That's it.
Something like this.
Yeah.
Yeah, man. And at the timing of it, if it happened like in the next couple of weeks, yes, the timing would be perfect. That's clear resistance.
Yeah, and it would also line up with the 100-day moving average as well. Pretty close.
Okay, so all of those confluences, like all lined up in this area, would make you think maybe if we do get there, that's a lot of stuff to slap us back down. I don't know if that's going to hold. Maybe that happens.
Yeah.
Because that's a lot. You just pointed out, that's some good confluence over there.
So we'll see.
Yeah. Well, this was great, you guys. I thought this was going to be really cool, right? So we were talking about this earlier, how the three of us have completely different trading styles, but yet we're looking at the same levels, coming to the same conclusions in different ways. And we thought that this would just be a really cool sort of thing to share to the DED members and any viewers out there. Yeah.
I think that was a great idea you had to bring us together and talk about these charts. Good to see indeed the similarities, but also the differences in style. And yeah, let's see what happens in the next few weeks and months, because this is all quite long term. So it's about surviving drawdowns, or just staying sidelines until you see the correct moments for you pulling a trigger. Thank you for having us.
Yeah, enjoyed it. Let's do it again soon, guys.
For sure. Thanks, guys. It was good talking.